So this week we're talking about the most common insurance products. And I'd like to start with the insurance that most of us actually get through our credit cards. And for the recent years, these products have been a little bit more competitive. So some credit cards practically refrain from offering these insurance anymore. And some credit cards actually use these as their selling point. So be careful what's available to you and what is not. And it would be best before you rely on the insurance if you could call your credit card company and then confirm that the specifics of the insurance. But it is very common for credit cards to offer some sort of a purchase protection. So, for instance, a product that you bought with the credit card gets stolen or gets broken, you might actually have a purchase protection through the credit card. But like I said, you may have different cards, a Visa, a Mastercard, or through different banks. It may be best to call the credit card before you rely on this specific insurance. You should also know that a credit card is actually offered through a bank or a financial institution or a retail company like Macy's or Sears or J.C. Penney, and they may have their own protection only for their own products. You should also know that credit cards are offered. There are major credit card companies like Visa, Mastercard, American Express, and Discovery. But a Visa and MasterCard may have their own insurance products on top of the financial institution. So, for instance, you may have a credit card from Chase, and but it will have the credit card might have a Visa or a MasterCard logo. So you may have an insurance through Chase and whichever logo you have, Visa or a Mastercard, may also offer additional insurance. Both of which you could confirm with your specific bank that you have obtained the credit card from. Many credit cards offer travel insurance. These may be in case of cancellations, some sort of a reimbursement, or your flight gets canceled in connection and you need a hotel. They may pay for it. Um, but again, you should confirm this with your credit card. But the travel insurance comes in very handy. It might actually include things like if your luggage is late, the credit card may actually give you a reimbursement up to a certain amount, like $50 or $100, to obtain certain things, until your luggage arrives. Travel insurance may basically reimburse you for the entire trip if things like health or some act of God becomes the reason for the cancellation. Many credit cards, and on top of this, Visa and MasterCard offer some sort of a rental car collision and theft insurance. But again, please confirm this with your credit card before you rely on it. Um, this can be a bit tricky because most of the time the rental car company insurance is very expensive. So a lot of people may actually opt to, deny that insurance coverage through the rental car company because it's expensive and rely on the credit card. However, this collusion and theft, for instance, does not that they may have very deep deductibles. So be careful about how much deductible that there is. The collision doesn't cover chips on the windshield or scratches on the paint, dings at the door, things like that. And they might actually add up. So while this can be quite different from one credit card to the other, be careful what you deny at the at the rental place. You can actually pick and choose which insurance you want with them and which insurance you can deny with them, and then try to combine the best of both worlds. And you could always go with the rental company's insurance and use the credit card insurance as an addition. um, Car insurance is very common, and I'm sure that most of you either have or are planning to get your car insurance. Um, there's several different types. Obviously, liability insurance is a required by law that simply pays the other party in case of your fault during an accident. But the limits, you have to be careful. There's a minimum amount required by law, but it really is minimum. And if you get sued for an amount that's above and beyond your insurance coverage, you're still liable for it. So a lot of the times, going from a $50,000 liability to a $100,000 liability may not be as much in the premium, but if you get sued, it might actually mean that you wouldn't have to come up with cash out of pocket. So, when you're getting liability car insurance, you should check how much of a premium how much additional premium do you need to pay for the next level of protection. Collusion, comprehensive, these are in case you are at fault and you hit your car, and or your car gets totaled, or your car gets stolen, and that sort of thing, that you actually get compensation from the insurance. They will never be compensation for the full amount, so be careful with that. There's always deductible, and um, they might actually deem the amount a lot lower than the actual cost. There's also, certain things such as if somebody hits you, for instance, um, if the other party is at fault, their insurance would actually pay. However, if they don't have enough insurance, such as underinsured motorist or uninsured motorist, that you might actually get compensation through your own insurance. However, be careful with these definitions. Different insurance companies might actually have different definitions for this. You should uh, specifically read what they cover. In certain cases, they only cover medical expenses, not property damage. In some cases, it only covers liability and not collusion. And so, you should look into what your insurance refers to as the uninsured motorist. And different states also have different regulation as to these definitions. Um, there is always some sort of a um, you know coverage that you can get for medical payments for yourself, or for the party that you might actually injure during an accident, or the people who are in your car. Remember, you're liable as a driver for the safety of the people who are traveling with you. So if in case, God forbid, you get into an accident and you need to pay medical expenses of the people who are traveling with you, or the people that you have caused any damage, you might actually need insurance for that. And those medical expenses can add up. And in certain states, that could be punitive damages, and the insurance then becomes very, very pivotal. Um, there's also personal injury protection, and we talked about in the previous week's gap insurance. For instance, you might actually have debt on the car, and you might owe a lot of money on the car. But if your car gets totaled, the insurance might only pay you the blue book value, or what they deem the value of the car would be. And if it's not enough, then, well, you're out of a car, but you still owe a whole lot of money, and your insurance pays the value of the car, not the value of the loan. Therefore, you might actually need a gap insurance to fill that gap, so that you wouldn't have to worry about paying the remainder of that difference. And so these deductibles, you should be very careful, because certain things are actually quite nice. I got a chip, a stone in my windshield, and I went to a place, and they fixed it for free. And I said, well, I have a deductible, and they said, your windshield is exempt from that deductible. And so there could be a lot of things that are included in your insurance that are above and beyond the deductible. So again, you should read your insurance and to see what is included in the deductible and what's exempt from that deductible. Another common insurance for us is the renter's insurance, and this is a very nice insurance if you are renting your apartment. I had this during Katrina in New Orleans, and when we evacuated, I mean, we didn't lose any personal property, we didn't have any liability, but we actually incurred significant amount of living expenses. You know, it was about a month that we actually stayed at hotels, whatever we could find, and we ate outside, and we had to buy ourselves things to wear, and so it was quite a tough time. And our renters insurance actually paid the whole thing. Every week would actually send them a bill, and then they would just pay us. I mean, it was unbelievable. But we actually had a case worker, and she paid without any questions. I mean, it was unbelievable for us. And the cost at that time was about $25 or so a month. So it was incredibly cheap. And at that time, I thought that was the best investment that I've ever made. So through renters insurance, you can actually include personal property, anything that gets damaged or stolen, things like that. You could have your insurance pay for it, cover it. You also have liability. People come into your house, to your apartment. Um, they slip and they break a hip, and then they sue you. Well, because you're liable. You should be careful about, what you leave on the floor, and you should be careful about, the safety of your guests, and therefore there could be some liability issues where the renter's insurance would pay. Um, there are also coverages that include, for instance, your negligence. Things like, you leave the water on, things like you leave the power circuitry on, and things like that, and you might actually damage the property or damage the downstairs neighbor's property and things like that. And you could include those into the renter's insurance, but I do believe that they are separate and you have to request them separately. Generally, renter's insurance is fairly cheap, and I think that it's a very, very useful. By experience, I know them to be very, very useful insurance products. Another very common insurance product is a homeowner's insurance. So when you own your home, um, you have certain concerns. For instance, damage to the house, damage or loss of personal assets in the house, and then just like the renter's insurance, liability. So damage to the house, there's a storm, hail, um, a gas leak, a tree falls on your house, things like that. It can happen, and your insurance would actually cover it. You will obviously will have deductibles, but again, you should be careful about those deductibles. For instance, years ago, a hurricane hit when I was living in Baton Rouge, and Gustav, I think, was the one that hit, and we lost our roof almost completely. And I remember $5,000 deductible, and it was a very high deductible because I couldn't, afford the premiums with a low deductible. So that's what I had. Um, but then I found out later on when I got the roof fixed, um, I was told that the state had named hurricane deductible maximum, and therefore at that time, my deductible was, I was told that maximum allowed deductible was $2,000. So I ended up paying $2,000 deductible, even though my overall deductible was like $5,000. So you should know, again, very much like the car insurance and the credit card insurances, what deductibles, you know, are exempt, or what situations are exempt from deductibles. Many states have very high insurance regulation, and insurance companies actually do have quite a few um, negotiations with the state in order to be able to provide insurance in the state, and therefore they might actually have um, things, stipulations as to the deductibles. Um, the liability refers to anything that has to do with your property. A male person walks into your property and then slips and breaks a hip, you're liable for it. I mean, you should be very careful as to the safety of your front yard, backyard, in your house, and your guests, as well as any person who's actually coming into onto your property or into your property. And it's your liability. So the upkeep of and the safety of the property is your responsibility, and therefore, your negligence could cause liability. So the homeowners insurance will actually provide coverage for that liability. You should also know that flood insurance is separate. A lot of the times, FEMA sponsored or FEMA provided flood insurance may be sold through private um, insurance companies. So you're getting an insurance from ABC company or whatever, and but behind it all, you will see actually FEMA is the reinsuring company. So, but flood insurance and homeowners insurance, a lot of people think that they actually come in as a bundle. They don't. They're two separate insurance. A lot of the times, they're two separate companies. And in fact, I don't know if any homeowners insurance will cover flood. So the water damage, for instance, if it happens because your dishwasher broke, it may be included in your homeowner's insurance. But if it happens because there's a lot of rain and the water seeps into your house, well, then the flood insurance is required, and homeowners insurance won't cover it. As far as I know, the homeowners insurance will not have a coverage for flood. So you need to have a separate flood insurance. There's a very nice insurance called umbrella insurance. Now, this is when, this is against liability, right? And so it doesn't actually pay you anything in case things go bad, but this actually, reimburses you against liability. Now, think of it like this. Let's say that you had a car insurance, $50,000, and you got sued for 200. Well, now you have a problem because your car liability is 50, and then you got sued for a whole lot more, and you're liable for it. I mean, just because you have insurance up to 50 doesn't mean you only pay up to 50. It just means that your insurance company will pay up to 50. But if you lose the court case, you actually are liable for the whole thing. So, umbrella insurance will actually insure against claims that are greater than homeowners and auto coverage, right? So, but again, you should be careful as to which umbrella insurance you're getting and what it covers, because sometimes umbrella insurance will cover very specific amounts. Like, for instance, it might say above and beyond $500,000, right? So this, it can be tricky. So think of it like this: a car insurance says 50, you got sued for 250, you have an umbrella. You're thinking you're covered, that's fine. But if your umbrella says anything above and beyond a half a million, well, then you got a problem because you just got sued for 250 and your insurance is only 50 and your umbrella starts after a half a million. Well, that's a problem because then that $200,000 difference you're going to have to pay up and your umbrella is meaningless. So umbrella insurance is usually quite cheap. You could get it for a few $100s a year, and it might actually cover the entire family, not just you, but the entire family. So it's usually a very good idea, but you should check to see what is included in the umbrella insurance and what it actually covers and your exact coverage. Another very common insurance is health insurance. It covers cost of medical treatments, doctor visits, hospital stays, emergency care, prescription drugs. There's almost always some sort of a copay. And then sometimes, most of the time, you will also have patient responsibility. So it works like this. Say you go to a doctor and then you have a $20 copay. Fine. But then you could also have a, say, out of network, for instance, patient responsibility. So your insurance might say if the doctor is in network, then we'll pay the whole thing. Your copay is fine. That's it, but nothing else. However, if it is out of network, for instance, they might say, the doctor is going to bill us $500. There's a 20% patient responsibility, so you got to pay the 20% off that $500 above and beyond the copay. So the health insurance can get tricky. So, I mean, I probably could have a whole semester long, uh, talk about health insurance. So I'll just basically leave it with the, saying that, for instance, most health insurance, at least required, uh, through the Affordable Care Act, requires the health insurance to pay um, whole or part of or majority of medical treatments, doctor visits, hospital stays, emergency care, and prescription drugs. Um, you should also know that long-term care is almost always separate. Health insurance may have a clause, a coverage that requires an additional premium, but a long-term care, unless you ask for it, is usually not included in the ordinary common person's health insurance. Long-term care, refers to, you know, you get paralyzed and you need to have taken care of, and that's long-term care. So you should make sure that you know what's included in your health insurance. Um, Another common insurance product is life insurance, and there are several different types, but these two are the most common to life insurance: term life insurance and whole life insurance. Term life, simply, you pay, oh, I don't know, say 50, $60 a month, maybe $100 a month, and then your insurance pays, $200,000 to your beneficiary in case you die. It's a very straightforward insurance. Um, you pay X amount of dollars, and then you die, and then your beneficiary receives significantly more. This is the one that we watch on the movies that says, "Oh, you killed your husband, and he had a term life insurance for $2 million, and now you go to jail." So be careful. But the term life insurance does not accumulate, meaning you do not get your money back if you don't die. Um, a lot of the times, the term life insurance will have an age limitation. So, for instance, 65 is a very common age. So, if from now till 65 you die, then your beneficiary gets X amount of dollars, and then you pay a monthly premium for that. But if you don't, well, then you get nothing back, right? So it's like it doesn't accumulate. It's not a savings account. You pay for a service, and then that service expires at 65. If you don't use the service, well, you paid for the service. Thank you very much. A whole life insurance is a little bit more, and there are different types. And by the way, the whole life insurance may include a term life insurance, right? But a whole life insurance usually is a term life plus some sort of a retirement scheme. So the premiums that you pay into it accumulates. But again, you should check with your insurance company as to, uh, they might actually refer to. So put it this way: you might pay $100, but 99 may go to a term life, and you may be putting $1 into a whole life. So you should know how much of your premium goes towards your term life, even though you're sold a whole life insurance. Remember, the insurance companies are not for charity. They're not there for, they're there to make money. So it is our responsibility to know everything that we're buying. Do not rely on averages. Do not rely on, oh, this is a common contract, everybody signs it. Well, be the one that protects him or herself. So be careful as to what you're signing up. It's very common to package a term life into a whole life insurance. So it looks like a whole life, but in reality, it's a term life. So be careful how much of your premium goes towards your retirement, goes towards an accumulated account, at what interest rate, and what are the stipulations. Um, if you die prematurely, how much money is paid to your beneficiaries, and that sort of thing. Life insurance can be a very nice safety net for your family if you're the only bread earner or if you are a significant bread earner. There are also life insurance, for instance, for death benefits, funeral costs, final days, end of life costs. And they can be significant, up to, $15,000, $20,000. And there are end of life insurance that would actually pay for funeral costs. Finally, there are government provided insurance. We pay taxes, we're taxpayers, so we get something in return. These are in the form of Social Security Administration, and they provide insurance for unemployment. So if you have been working for a very long time and contributing towards the unemployment insurance, and you lose your job, you can apply for unemployment insurance for a certain period of time. You will receive benefits until um, either you find a job or that term expires. You don't get unemployment for life. You get unemployment benefits for a certain period of time, and and then if you can't find a job by then, well, tough luck. So the unemployment insurance can be tricky, but it is nice. I mean, many countries don't offer this, so it still is a very nice safety net. There's Medicaid and Medicare. Medicare for 65 plus, health insurance, the government, single payer, and it's actually a very nice. Um, I can't wait to be 65 to take advantage of it. And Medicaid are for those who cannot afford um, medical costs, and those who actually may be in need of medical aid. Um, and our Social Security administration offers these as insurance products for U.S. citizens. There's also a disability insurance. So you've been working and you've been contributing towards the disability insurance, and the government will actually give you a disability benefit until either your disability goes away, or if it's a permanent disability, then you might actually receive disability until as long as you need. So, but these are the government provided insurance, and these are the most common insurance products. So, this is an introductory course, so I didn't want it to go into too much detail of individual insurance. But if you have any questions, please do let me know. And thank you.